Hey everyone, I'm Charting Man Dan of the Chart Guys. We're going to check in on the markets in this video and see that the bulls are keeping their complete control. This is definitely a short squeeze, but going to be looking at a temporary top set in the near term future. I'll show you what I'm looking for as we check in on the charts. So another gap up for the NASDAQ, and what my mindset has been approaching the market this week has been, okay, last week, this is unusual price action. Big flashing light in my brain. This is different. This is unusual. And why that matters is because as full-time traders, we sit down at the computer every day, and 95% of the days we get normal price action. We get most likely scenarios playing out, whether it's, a big retracement and then an equilibrium and things like that. And so we play based on probabilities for most likely scenarios for normal price action that we've seen thousands of times. Last week was, this is different and unusual. This is an uncommon price action. And so I head into this week saying, all right, we know we need a daily trend change eventually. We know we're a bit extended on the bounce, but the bulls are proving their strength to us on this bounce with the volume. We talked about that ARKK volume last Thursday that was standing out significantly. Might have been Wednesday. And just the follow through. It's obviously very bullish over the last week plus. And so I approach saying, all right, logically, I know I'm looking for daily consolidation and I know I'm watching resistance. And then I look around social media and I see everybody looking at that resistance to short it. And I see everybody drawing, Trend Spider or TradingView or whoever, all these major accounts, everybody's drawing this inverse head and shoulders, anticipating a rejection from resistance. And so I look at this action and say, well, that means in my opinion, that increases the probability that the less likely scenario is going to take place and we're going to break resistance before we top out. So that's kept me extremely patient as a bear recently and, targeting the weaker sectors like XLE. We'll look at that in just a moment after going short yesterday and getting a lot of follow through there. But as far as the broader market is concerned, it's not ready to short yet. And I've been a broken record the past few days because I'm live streaming and saying the exact same thing. The bears are not proving anything. The bulls have complete control. If Amazon, Apple, and Microsoft, the three most important names in the stock market due to their weight in the NASDAQ and the S&P 500, if they're going up, the NASDAQ is going to go up. If the NASDAQ is going up, the S&P 500 is going to go up. So those three names are now the most important focus for me each day because the last few days, I guess the last 2 days this week, they are solely responsible for the strength in the NASDAQ with their breakout continuation. And so right now we've got, Microsoft, I keep calling it our benchmark long for the monthly bull flag because it is now 1.2% away from all-time highs. And if it confirms a monthly bull flag to all-time highs, that increases probabilities that QQQ will do it, and it increases the probabilities that SMH will do it as well. And again, it's just straight up. There's just no sign of a top. We gapped up open, and after gapping up open, we set the low of the day in the first 10 minutes, and we did not break that level for the rest of the day. So that's full bull control. What we saw yesterday, well, let's look at our other names first. So Apple, same deal. Apple is testing resistance, and the other name, Apple, Microsoft, and Amazon, again, just straight up since earnings. We're just not topping out. And so I'm fighting myself because I want to short. Oh, we're extended. Extended is not enough of a reason to short in this current scenario. In normal scenarios, sure, you could scout a short extended into resistance. But in my opinion, I need the bears to give me a reason. That's been my mindset. Bears, show me I should be looking short. And the NASDAQ bears have done nothing in the last week plus to show me that I should short. Every single day is full bull control. Even, on the way up today, just look at how the 1 minute time frame, you get 1, 2, 3 holds of support into a new high of the day. And then you get 1, 2, 3 holds support. And again, we eventually roll over, but look at the 1 minute RSI on the day. Oversold marks the low of the day, V-shape. Oversold marks the low. We're not going, there's algos. This tells me that there's algos that are programmed to buy 1 minute oversold conditions, which just is not giving the bears an inch. If we're going to see algos step in to buy every single time 1 minute RSI is oversold, that shows a ton of buying pressure. We also had yesterday, first 5-minute oversold conditions mark an hourly higher low into continuation. That's back burner 101. We know that is the strongest that a trend can be when short-term oversold conditions are marking the longer-term higher lows. And so that happened yesterday into bull follow through today. So we're trading with the same characteristics of a bull market. This is the kind of trading that I would be doing if the NASDAQ were in blue sky breakout in a daily, weekly, monthly uptrend. Obviously, that's not the case, but this is reminding me of crypto 2 weeks ago where I said, we're starting to see the characteristics of a bull market shaping up for the same reason. The back burners were marking the higher lows. We were getting healthy bull rotation. And so again, that's been my reason for not shorting the last few days, aside from selective weaker names. But now I'm starting to get interested. What I would love to see, if this trade's going to come to me, is give me a gap up open tomorrow, which would be a NASDAQ fourth gap up open. No, 1, 2, 3, a fifth gap up open in 6 days if we get it tomorrow. But if we get that, I want to see a break of resistance on a gap up open, and then I'm going to start being a little bit more aggressive as a bear and start positioning for consolidation and start reloading my hedges in my IRA account. I made a little nibble end of last week, nothing significant, but I will start using a bit more size if we get a gap up open tomorrow. But otherwise, again, I'm just keeping the mindset of prove it to me, bears, because we have to see the bears prove something on the hourly and then confirm an hourly downtrend if it's going to follow through. So again, I've been in no rush, but I'm starting to get interested and I want to see a break of these resistance levels. And I'm watching the futures charts because the futures resistance is a bit further away than SPY and QQQ right now. So we can see the S&P 5 or the S&P 500 futures has a couple little levels to be watching. We're closer on the NASDAQ. The NASDAQ has been stronger because the financial sector has been consolidating. But again, I want to see the NASDAQ break resistance and then shape up daily consolidation, because I believe that this market wants to stop out. Now, who's buying up here? Well, the people that are buying are the people that have started the week shorting. Oh, we're extended. We're heading towards resistance. I'm going to short. Nope, stop out. Well, I'm going to short. Nope, stop out. So it's just, aggressive shorts are getting stopped out. And as far as I'm concerned, this is the same move from post FOMC. It's still churning the squeeze. And it's not, people think short squeeze, they think GME, or they think something that's going up 15% in a day, 30% in a day, just straight up. This is a broader market short squeeze as far as I'm concerned. And I'm treating it like that, which means I'm not stepping in front of the train trying to nail the top. I know that the probabilities of me nailing the top of a broader market short squeeze is very low. So I'll give myself an attempt if I get that gap up open and break of resistance. But again, just being really protective and patient, knowing that, I don't have to nail the top for it to be a worthwhile trade. SMH, continuation, daily stair-step pattern. It's also approaching resistance. 154.06 is a bit of a way away. Had to pause. It was a headline I needed to read. So, I was talking about SMH. 154.06 is resistance. NV. Just had to look at a headline there. So, SMH, again, 154.06 resistance. And if we fail, we look for the daily higher low. Regardless, we're going to look for a daily higher low and try and confirm the daily trend change into next week or at some point next week. And NVDA is remaining strong. Bounce continuation, hold the low of yesterday, break the high of yesterday. And again, the question for these two names, are they monthly bull flags? And the bears have to break the lows of October to prove to us they are not, because the simple statement is if the low of October holds, SMH and NVDA are monthly bull flags heading to all-time highs. The bears have to prove to us that that is not what is shaping up. Tesla has been weaker, but we held the low of yesterday by 72 cents, and now we've got an inside bar. So trying to confirm a daily uptrend here as well, but weaker just in the sense that the daily consolidation has already begun when the NASDAQ has not started daily consolidation. Healthcare bounce continuation. Again, nothing standing out, but a tiny bit of green, higher low and higher high. Compared to yesterday, this is the weakest of the major bounces, major sector bounces, but it is still 65% retracement. So really all we care about from here is when do we lose the daily stair steps in SMH, QQQ, SPY, XLV, and all the names that have not done so yet? And how much do we retrace when that happens? I honestly don't care if it happens before we break resistance or after. That's not going to be a meaningful, it doesn't matter to me. What matters is, do we confirm the daily uptrend when we top out? Whether we break those weekly resistances in SPY and QQQ or not, that daily uptrend is going to have to confirm regardless. If we fail and then see it confirm, we're going to break it eventually. If we break it, but then the daily uptrend is not confirmed, then the bulls fail to follow through. So I care about that daily trend change the most. XLF, daily inside bar. Bears have to break 33.50 to continue consolidation towards the gap fill. This is our weakest major sector this week, but holding on today, pretty flat, uneventful. IWM further pullback, weakest sector, one of the weaker sectors for sure. 170 is a gap fill level. Same thing, we're scouting the daily higher low, but this pullback is happening without the S&P 500 pulling back. So we can say if the S&P 500 starts daily consolidation tomorrow, IWM bears are positioned well for further downside. ARKK continuation. So yesterday we held support by 4 pennies, and now we get the higher high today, and we get to the highest level in about 5 weeks, almost 6 weeks. So daily stair-step pattern still intact there. AI, daily inside bar, trying to shape up a daily higher low. So prove it, bears. That's how I've headed into every single day. Prove it, bears. Some bears proved it. IWM bears proved it. XLE bears proved it. Couldn't have asked for better follow through from that short trade yesterday. So I took a little bit of profit yesterday, took a little bit more profit this morning pre-market, and now I'm risk-free. So my stop is over 87.68 and can't lose. And now I'm just going to ride this position. In my next target will be daily oversold conditions. But really what I'm looking for long-term is this monthly rising wedge. I don't know if I'm going to hold this short position for the potential months that are going to be required for this pattern to fully play out. But again, it's the monthly rising wedge looking for 4-month consolidation because we're in a 4-month stair-step pattern for years, and I'm looking for that to break. And oil confirmed the weekly downtrend with significant follow-through. Big bear day for oil. So everything aligned for this energy sector trade. And if you've been following along for the last couple of weeks, you know that I started talking about this short somewhere back here. And I just had to wait for the right risk reward. Nope, gotta wait for the daily bounce. All right, there's the daily bounce. Now I'm interested. And I was looking for oil to get the bear break for it to align. And I was also looking for SPY to pull back. And that obviously has not happened. So I can say that the XLE bears are positioned extremely well if the S&P 500 starts daily consolidation within the next day or two. But next target from here, again, daily oversold. There's a gap to fill at 83.72 that filled today. But I might just walk down my stop every daily lower high that we set. I've done that a bunch of times with swing trades this year and it's worked out. I did that with a Tesla long. And I just walked up the stop every daily higher low from my entry and then just stopped out up here. So I might do that with this XLE short. It's probably what I'm going to do. But I'll keep you posted. So oil bears in full control. 4-hour getting pretty beat up. Stair-step drop. And I'm watching oil now for a long-term tightening range. High, higher, low. This is the 3-month chart. And now watching for the potential of a lower high. Let's go to the 2-month. So again, just watching for the potential of an equilibrium. But that higher low may take a while to form. It could form 10% lower. So the bears have regained full control of the short term here in daily and weekly downtrends. The dollar, daily bounce underway. It was just a 4-hour stair-step bounce. We have not confirmed the 4-hour uptrend yet. So that's what the dollar bulls want to see from here for daily bounce follow-through. Bears want to see that daily lower high set as soon as possible because we have not confirmed a daily downtrend yet on this drop, and that's the next step for the bears. But with the dollar bounce here, gold confirmed our head and shoulders that we were watching. Bulls would love for this head and shoulders to have no follow through and try and shape up a weekly bull flag, but I need to see a 4-hour uptrend confirmed from here on gold if we're going to call that a daily bear break with no follow through. I played this bounce pre-market on gold. This was a super stack, and a super stack is when your hourly RSI is in the teens, the 30-minute RSI was in the teens, the 15-minute RSI was in the teens. So I say, all right, I'm going to give it a shot for the oversold bounce. Had a real good entry, and I did exit it all on that initial move up because I was about to live stream, didn't want to be distracted. But that was a nice super stack. When everything's aligning oversold on the shorter term time frames, we know the probability, especially when there has to be no news involved, because if there's news involved, the RSI is less useful. But a nice bounce in response to that. Silver is testing its daily support, technically broke by a penny. Again, same deal. If it's a bear break with no follow through, it's possible to set a quick weekly high or low, but we're not seeing anything from the bulls yet. We've got to see regain of control. We need to see a 4-hour uptrend back to the bulls on gold and silver if we're going to call it a daily bear break, no follow through. So I can't say that yet. Miners pulled back real hard. Got to set the daily high or low and confirm an uptrend from here. GDXJ is still stronger than GDX. Got to set the daily higher low and higher high, but that's only going to happen if the metal bulls are forming weekly bull flags. All right. See what tomorrow brings. If we gap up and break resistance, I'm going to start more aggressively scouting a short. Otherwise, can patiently wait. Don't have to nail the top. Let the long swings do their thing. Definitely going to start protecting them soon for that daily consolidation, but otherwise, one day at a time. And just again, can't stress enough, recognizing this is different. This is unusual. That's what I did during the CVID drop that saved me from trying to play a bounce way too early. And we just have to recognize when things are unusual and adjust our trading. Because again, if we trade how we trade the 95% of the time, we get normal price action. Those 5% of the time are going to hurt us badly. So we have to recognize the shift in market environment. That's definitely a skill set that traders need to develop. Do good things. See you tomorrow.